Have you ever heard real estate gurus getting 20% ROI, return on investment? Some even proudly state that they make 40%, 50%, or more. Yet, the property they bought only offers yields of 7% on average. What the? How could anyone possibly make 50%, while us mortals only make 7% on the same investment? Hi, this is Andrew, and in this video, I'm going to show you how it is possible to earn high ROI profits from very low yields. In this example, we can earn 50% ROI from a tiny 1% yield. Let's get into it. Before we get started, I need to explain that I'm not a certified financial advisor. Neither is my business a certified FCA activity. This video is not advice, legal advice, nor financial advice, but for entertainment purposes only. Yes, this is how we operate our business, but it may not be suitable for you. All investments put your capital at risk. The value of your investments may go up as well as down. Past performance does not guarantee future performance. As always, I implore you to do your own research, DD due diligence, and get your own independent and legal advice. Scenario A. Let's say we have an offer from a bank. 1% for the whole year. Whoopee! What a fantastic offer. How could anyone refuse? Typically, we'll deposit our £1,000, wait a year and collect our £10 profit or interest a year later. Since we're not working with anyone, we can keep all 100% and keep the whole £10. Here are the numbers of Scenario A. Not sure how you think, but that's hardly inspiring. And I certainly wouldn't be able to create a legacy for myself or my family from a measly 1%. Scenario B. Is there another way? Let's say we worked with others to leverage some finance. Once again, we saw the same fantastic offer by the same bank. Deposit £1,000 for 1% a year. Awesome! This time, we work with a strategic partner to leverage some finance and share the profits with them 50-50. We borrow £990 from our strategic partner and share the £10 interest or profit with them 50-50. So that's £5 for us and £5 for them. So to repeat, I invested £10 to get a £5 profit. That's a return of 50%. You can see the figures in column B. Although I'm not suggesting strategic partners will be lining up around the block to work with you to make £5 from a £990 investment, but you can clearly see how anyone running a business, leveraging finance from a strategic partner, can get very high returns, even if the market yields are a tiny 1%. This is how fund managers, REITs, and other investment companies make their returns. So this begs the question, why would anyone want to be a strategic partner and give up half their profits? This is called armchair investing, i.e., the strategic partners sit at home in their armchair while the investment manager and his money do all the work. Typically, strategic partners are very successful in their own right. They are far too busy to have the free time to fully understand all the intricacies of real estate investing. So they delegate the task to a company to manage the portfolio for them and to share the profits with the company owners. Strategic partners could be inheritance or lottery winners, celebrities, or very successful business owners. In this oversimplified example, we can clearly see how it is possible to earn large ROI profits even when yields are very low. Thanks for the view, and if you found this useful, please like, share, and subscribe. For more details on real estate investing, check out our other videos. Links in the description. What other examples can you think of where you can quite legitimately earn higher profits than others? Please share in the comments.